But yeah, the big takeaways this week though is we're watching the DXY. We're going to be looking for the FOMC meeting results. So again, keep in mind, mark the calendar. Tuesday and Wednesday is the meeting. So by Wednesday, we should have the actual inflation rate numbers, which is the 20th, September 20th. And once we have that, we'll almost certainly get a little bit more clarity here.
Or the FOMC.
Yes. Yeah, for the FOMC. So that's going to be affecting our DXY. And like we said, we're watching for the DXY to basically perform an SR flip. So we want to see it bounce now, basically on the Trading Buddies strength band.
Yep.
We already have our bull print. If we get our bounce, we should get that green band, and that would be the moment for us to act basically on that time frame.
Yeah, basically, if you're into forex, all the forex traders can long the dollar.
Exactly. Yeah, there's another.
Or continue to long the dollar.
Yeah, continue. That's pretty much. A lot of people are long the dollar at the moment, and it makes sense. The dollar has quite a bit of strength now. It's also the plus side of the dollar gaining more and more strength, and the FOMC or the Federal Reserve increasing interest rates is that we're seeing really high interest rates for really low risk positions. Like you can currently buy, I think Fidelity recently announced their their CD payouts, and it's like 5.4% for like a 6-month CD. And so that's fantastic. You know, a CD is a certificate of deposit. It's basically you deposit money into this account, and you can then withdraw the money plus the yield at the end of the term. So if you're doing a 6-month CD and let's say you do $1,000 into it, then you would, 6 months from now, you'd be able to withdraw $1,000 plus, the 5.5% APY. So in 6 months, you'd expect to like 2.7 or something percent. So then, you could withdraw $1,028 or something 6 months later. And it's all FDIC insured. It's pretty attractive. And, obviously, as the federal rates go up, the rates offered by the banks to the individual traders go up as well. So it's like, federal rates are 5.5%. CDs right now for 6 months are 5.2 or something. So it's like, oh, they can borrow money from you for a little bit less than they can borrow money from the Federal Reserve. And, it's an interesting time for that, and they even have some 10-year CDs offered at like 5% or 4.8 or something, which that's substantial considering, you can lock in that yield for a full 10 years. Of course, the shorter term ones are producing higher yield, and that's that inverted yield curve that people have been talking about. But we can touch on that next week when we look at the FOMC meeting and see what the new inflation rates are. So until then, let's keep our eyes on the DXY. And as usual, the crypto market always has its moves and its news coming and going. So we'll keep our eyes on that. Anything else you're like excited for, or looking forward to this coming week, or it's mostly
I
eyes
think
on
just trading stocks, like we do. Because of the dollar dropping, like we're gonna probably see the stock market run up.
Yeah.
So I know we talked about Carvana like a few weeks ago. So
the little handle that we said was bullish is continuing to bounce. Very much bullish.
There you go.
It's been a good Monday. So we've been green on quite a few positions.
Ready to play the next pump.
Yeah.